you can have 2 or more VA loans at the same time. The VA doesn't actually issue VA loans. There's no set debt-to-income ratio limit. Instead, VA loans calculate something called residual income. There is no minimum credit score on VA loans. VA is the only loan type that allows a manufactured home that's been moved. When you graduate basic training, you only need to serve 90 days on active duty until you can use your VA loan, as long as your duty station allows it. If a reservist deploys before they hit their 6-year mark, they can qualify for a VA loan after 90 days on active duty. You can buy a quadplex with no down payment at the same rate as a single-family home. You can buy up to 7 units with a VA, but doing so comes with very specific requirements and it's extremely rare. You can buy a house while deployed. VA is the only loan type that factors in childcare into your debt-to-income ratio. VA loans consider some unusual factors in their approval, such as geographic region, family size, square footage, and your pay stub's tax withholdings. VA loans are assumable, meaning you can hand off the current rate to someone else, even a non-veteran, to help sell your house as long as they can qualify for the loan itself. VA loans do not require a down payment or mortgage insurance. There is no purchase price limit to a zero-down VA loan as long as it's your only VA loan. There is a funding fee that's charged on the VA loans that's financed into the loan as negative equity, but it can be waived if you have a service-connected disability or have received a Purple Heart. There is no flip rule like with the FHA. In the case of a short sale, VA doesn't have a waiting period requirement as long as payments were current. Other loan types require anywhere from 1 to 4 years of event seasoning before you can buy a house again. If a veteran dies from a service-connected disability, their VA benefits transfer to their spouse. The seller can only pay up to 4% toward inducements, but there's no limit to the amount of closing costs that the seller can cover. In a community property state, debts from a spouse who is not on the loan need to be included in the ratio. Yes, that includes if you're legally separated. You need to be married to your co-borrower to avoid a down payment, unless they are also a veteran utilizing their own entitlement. You don't have to be married to your co-borrower to get a VA loan, but they will need to provide a down payment, and the veteran needs to qualify for their half of the loan. This is called a joint loan. VA loans have a special streamlined refinance option called an IRL, Interest Rate Reduction Refinance Loan. It allows you to change the details on your loan, but doesn't require an appraisal or income verification. It's a really great way to really quickly and cheaply lower your interest rates when rates drop. Unlike other loan types, if the appraiser knows that the appraised value will be less than the contract price, VA allows for tidewater. This allows the agents to gather comparable sales to support the home's contract price to send to the appraiser to consider before the appraisal is published. Depending on the strength of the rental market in the property that you're leaving, you can use departure residence income without a lease agreement. However, the lender is still allowed to require the lease agreement prior to closing. VA home buying benefits don't expire and are available for life.